Hey, Future Wealth Builders. This is Dr. Joaquin Wallace, and thank you for joining me on the New Wealth Wave podcast. Today, we are focusing on stage number 4 of the 7-stage generational wealth model. And to help me to lead the discussion would be Anmol Singh. Welcome to the show, Anmol.
Thanks for having me. Looking forward to chatting with you.
So if this is your first time tapping into New Wealth Wave podcast, make sure you hit that subscription. And for those who have been riding the wave with us from January, or you may join later on, we want to thank you for being a part of the New Wealth Wave community. So before we get started, let's talk about what the New Wealth Wave podcast is all about. The New Wealth Wave podcast focuses on my 7-stage generational wealth model and its 3 phases to life: past, present, and the future. And each of the stages talks about those specific phases of our lives. So stage 1 is our internal and external ecosystem. Stage 2 is our financial genetic code, which we focus on financial trauma and anxiety. Now, both of those are the past. Stage 3 is financial healing, where we focus on reprogramming our financial genetic code, as well as going back to our internal and external ecosystem. Now, stage 3 is all about the present. Stage 4 is financial edification. That's where Anmol comes in. Stage 4, we talk about financial edification, where we focus on financial literacy and inclusion. That's the present. Stage 5 is financial well-being, where we focus on not outliving our income and being able to absorb financial crisis, and most importantly, having financial health. So important. That's the future. And stage number 6, that is generational knowledge. Generational knowledge, this is where we focus on transferring wealth, assets, and knowledge. And this is where we came up with the term generational wealth begins with generational knowledge, which creates our financial footprints to stage 7, generational wealth. Now, let's talk about our speaker for today. Trader, investor, and author of Prepping for Success, Anmol Singh knows all about riding the emotional roller coaster of the stock market. The difference between the profit and losses often comes down to understanding how to make logical, fast decisions based on constantly changing data. Anmol and his team at Live Traders show people how to execute trades, review different scenarios, and most importantly, keep their emotions in check when stakes are high. Because we all know, Anmol, investing is all about emotions. We need to keep those in check. Anmol has been trading since his college dorm days, where he saved enough money to legally start multiple franchises and move to America. He is well established as a successful trader. By the time he was 22, you may recognize Anmol from his many features in many media outlets, including Business Insider, Forbes magazine, and International Business Times. Again, Anmol, we would like to thank you for coming on to the New Wealth Wave podcast. And so before we get there, you had a chance to take a look at the model. What was your initial thoughts?
I think my initial thoughts are that you've made it pretty well into like a wheel where people can sort of visualize and see where they're at, because where you want to go, if you don't know where you're starting from, then you don't know where to go. So I think the model makes it very easy for people to, okay, see where am I at? Which skills do I still need to acquire? Am I still in the financial knowledge stage? Do I need to get more knowledge? Do I need to work on this? So I think that breaks it down pretty easily. And I would see myself in the generational side of things at the moment. You know, how do we keep it growing? How do Rockefellers and all these people keep their generational wealth going despite so many generations after them? Whereas most people don't go past like first or second generation. Their money doesn't last long. So I think that's a very interesting model in how you put it together.
Appreciate it. And before we get into the heavy lifting, and the heavy lifting now, we want our listeners and your listeners who's watching this as well, I want you to tell them a fun fact about yourself that no one knows other than those that are close to you.
Yeah, that's an interesting one. But I think the fun fact for me is like, you know, hey, I've never had a job. I think a lot of people think, oh, did you work on Wall Street and then you came over here and then you started to get into this business? But not really. I've never worked for anybody. I've never had a job. I was starting trading from my dorm room, and I've, done that ever since. So I guess the fun fact is like, I don't have a lot of any 9-to-5 experience. I don't have any day-to-day kind of experience that a lot of people have, because I've been running my own thing since I was 18 years old.
And you always say coming over here to America. Where were you born and where did this start?
Yeah, I was born in India, born and raised in India, went to my high school there. But I kind of always felt like either I don't fit in or I don't belong, or for whatever reason, the thought of America like just came to my head, even when I was like 16 years old. And I was like, I am going to find a way to go there. And then the stock market was something that kind of came to me. And I was trading the US market while, yeah, I was still in London. I was still living in India. So I just panned out that I said, I probably should move there because at least I'll have human time zones where I trade at 9 in the morning and get done normal human hours rather than in India where you would be trading 7, 8 in the evening and stay up till like, 1 or 2 in the morning. So I think for me, yeah, I was born in India. I went to high school there. Then I went to study college in London, did my business degree from there. And then after that, graduating from there is when I moved over to America.
So now you had a chance to look at the model. So this is where we get into the heavy lifting of the program itself. So we always start with 3 questions, and the questions are designed to show our listeners that we're both vulnerable. We're allowing people into our lives as well, but it shows how we started on the model, where we're at on the model, and kind of where we're at in our present state. So before you became who you are, this educator, respected in the industry itself, where were you at on the model before you became who you are today?
I think just like everybody else, I think I was starting from stage one because one of the things that I really had to work on, especially I guess as it relates to stage two, was what are my current beliefs about money? What are my current beliefs about success? What do I really believe? And all of that for me came from my parents, where stock market was the last thing they would ever invest in. Because in Indian families, they're like, oh, that's a gamble. You're gambling in the stock market. You should be a lawyer, engineer, doctor, something like that. So I think first I had to kind of work on that part of it. And so I just change my beliefs, change my genetic code, as you say, right? Like change that and create my new money beliefs. Like, what do I actually want to believe? And what do historical examples that have been successful think about money? That's where I started just taking inventory of what I believe right now. And then from there on, what are the new beliefs that I want to create? And then kind of working through that wheel. So yeah, just like everybody else, I think starting from step one and realizing there's nothing wrong with it because everybody at some point's got to start somewhere.
Excellent point. So my second question to you was, you started at stage one. What was your aha moment that you realized that you needed to make change and change was intimate for you?
Being a typical introvert, the last thing that I wanted to do at that time was go into a job and have this office politics and colleagues and all these different people. And same thing with like starting, let's say, a physical business. Now you have to learn new set of skills, managing people, right? There's a whole different ballgame, operations of a business. So then I quickly realized that that's not where my strong suit is. I work way better individually. Now you should have a team around you, but when it comes to making decisions, there's got to be somewhere where the buck stops. And for me, I didn't like the whole bureaucratic process of going through levels to get an idea approved where I can just take action on it right now. So I think that is kind of the beliefs that I coded into myself that nobody else is going to tell you what to do. You got to tell yourself what to do. And I think that comes with being an entrepreneur and in that territory. For me, I think a lot of my beliefs initially were just about, okay, what are the successful people doing? What are the people who made it in life, their autobiographies? What are they doing? What did they do? And what were their beliefs about success? So I think a lot of that started for me from reading a lot of those historical figures.
I love how you talked about the opportunity to be your own boss or even working in an environment. You have what they call in the psychological world, you talk about the mechanistic versus organic, right? So
Yeah.
mechanistic is very rigid. Organic is kind of free for all. It kind of allows you to move and make changes throughout. And you found yourself looking at it from bureaucratic and a mechanistic standpoint, that was not where you wanted to be. You wanted to be more in an organic environment, and you've created that organic environment around yourself. With that being said, final question, you kind of touched on it just a tad. Where do you find yourself currently on the model?
I would probably say I'm past stage 5, potentially entering the stage 6 on stage 7, where I got the financial well being, right? I've done well. Now, how do I sustain that? And not only sustain that, but how can I keep growing it? Maybe at some point I'm like, okay, I don't foresee it, but maybe at some point I'm like, hey, something happens to me, I can't trade. Maybe, God forbid, something happens, I can't trade. Now, do I got to keep trading for income or can I have my money work for me in other ways? So I think that's where the generational wealth piece comes in. But how do you have your money working for you when you're not there? So I think preparing for yourself for that. Then how do I create generational wealth that lasts beyond my generation so that it goes into the next generation? Because the statistic is pretty clear. Majority of the people, even the wealthiest multimillionaires, billionaires, the money doesn't go past generation number 2, right? Generation number 1 or the next one ended up messing something up and the money is no longer there. But there's a few historical examples where people's money have gone 5, 6, 7, 8 generations later. So I think that is the next level is, okay, how do I go into that frame of mind? And I think for that, that's where step 6, as you said, generational knowledge comes in. So I think that's where I find myself at this stage of my life.
That's excellent because generational wealth begins with generational knowledge. And this is where you begin to create your financial footprints. Thanks for mentioning that because that is so important. Future Wealth Builders, welcome to the New Wealth Wave podcast. And today we have Anmol Singh, noted investor, trader, and author of Prepping for Success. Make sure you grab a copy of that book as well. Make sure that you hit the subscribe button right there. There it is. Hit the subscribe button below to become part of the New Wealth Wave community. So, Anmol, before we get into the questions, tell us about your book.
Yeah, my book is called Prepping for Success 10 Keys for Making It in Life. That is a culmination of notes that got me to where I am today. I worked a lot on myself, like, moving to a different country. There's a lot that I had to learn, a lot I had to deal with. Also, then you realize your own limiting beliefs, right? Maybe you were not like going to America, let's say, for the opportunity. Maybe I was running away from something. Maybe I didn't feel like I belonged. Maybe I didn't feel like I fit in. So there's a lot of personal development that got me to where I am today. And I had to work a lot on myself. And the way I did that is to surround myself with books, going to seminars, going to retreats, hiring the best coaches and mentors in the world to develop myself. But then in the process of doing that, I spent thousands and thousands of hours, probably at this point, millions of dollars, like hiring coaches and going to the streets, being part of mastermind groups. So I learned a lot. But I also realized not everybody has that same level of luxury to be investing in themselves, or maybe even the time to study all the things that I did. So then I wrote down notes to myself. What do I need to do in my own life to achieve success? Right. So I sat down and, okay, what have I actually learned with these coaches, the mentors, all the things that I went to and learned? What I actually learned. So I distilled it down into 10 keys that I need to follow in my own life to get me to the success. And then I executed on it. I wrote the book for myself originally, and then I went out and executed on everything that I wrote about and living from that, premise of what I wrote in the book. And then I just saw my life drastically get better, achieve new levels of success. And that's when I said, this could probably help a lot of people. And I had a lot of friends who came to my house and they picked up this manuscript, notes to myself. They're like, oh, this is really good. And I'm like, oh, why, it wasn't meant for you to be read. These are my notes. They're like, no, this is really good. You should turn this into a book. And that's when I got the idea that I probably should. If those things help me, they could also help other people. So I basically took it and converted it into a book on here are the 10 keys that work really well for me. And here's how they can work well for other people.
You know, it's amazing how we start a business, and oftentimes it's based upon a need or a want, or often it's always self-inventory, right?
Mm.
And that's how the 7-stage generational wealth model came into play. It was self-inventory of myself, along with me working with several clients over the years. And see, you know what? This is a pretty good model. I probably need to put a show together about it. And so that's what we did. And so that's why we have the 7-stage generational wealth model along with the New Wealth Wave podcast. So tell our listeners where they can pick up the book.
You can find the book on Amazon, Barnes & Nobles, wherever you buy your books. But also you could just go to my website, unmol.net, and you'll be able to grab a copy of the book from there as well.
So let's get into the question. So investing is such an emotional roller coaster. From your standpoint, what are a few points that you can provide to the novice investor who has been embedded with financial trauma and anxiety related to past experiences, shared experiences, or from various so-called experts?
I think the first thing is for people to realize there's two separate things. One of them is investing, one of them is trading. So when you're buying stocks and selling stocks, then we're getting into the trading game. And then trading is a skill. It's just like any other job. It's just like any other profession. You need to know what you're doing. You need to have a strategy, and that strategy needs to have been tested already to see how that strategy would have performed in the past. So that's what trading really is. It's the closest thing to a sport. Even though I could play decent golf, if I go out and compete at the PGA Tour, I'm going to be horrible, right? So the same way, most people need to realize that if you're buying and selling stocks without knowing what you're doing, that's like me trying to go and play NBA. It's not going to end well. So trading is something you have to really learn first. And it typically takes about at least a year for people to really learn it. So don't buy or sell a stock based on what your uncle said or you read something online, because that's all delayed information anyway. And you don't have any advantage in that. Now, when it comes to investing, the key is to invest every single month a percentage of your income that comes in, and you don't even look at it, whether it be a 5%, whether it be 10%, whatever your threshold of comfort is. As soon as it hits your bank account, your income, your salary, percentage of that should automatically be invested in the stock market each month without you even looking at it. Because if you did that, your money would be doubling every 6 years or so because of the rate of compounding. and markets have given an average of 10% return every single year. Think about how many times people shy away from investing in the market. Market's going to crash. Election's going to happen, right? Oh, the war is going on all over the world. And then 2020, people are like, world's coming into an end. Markets dropped 35%. But guess what happened? Since then, we're up 50, 60% since that point. So despite any of those things that happen, the market is designed in a way to always go up. Now, it's not going to go up in a smooth line, but it will always go up. So you might have dips along the way, you might crashes along the way, but eventually the market always goes up. Market's always been higher than where it was 10 years ago, every single time. So if you got a long enough time horizon, you don't need to worry about what's happening in the economy. You might get a decline one year, but if you're going to hold long term, 3, 5, 10 plus years, it's always going to come back up. So I think that's what people need to realize. I mean, I feel so bad. How many people in 2008, when the financial crisis happened, vowed that we're never going to invest in the stock market again. This is a scam. There used to be whole movements, will Occupy Wall Street. Remember, all these things used to happen, and those people never invested in the market. Since then, the markets are up hundreds of thousands of percent. So those who didn't invest or worried about the news or was watching the news too much, they got left behind. They missed out on generational returns, and your money is losing value every year, roughly 6 to 7%. So if you're not getting ahead of the 6 to 7% and you're just keeping your money even in a savings account that might pay you 4.5%, you're still losing money every year. So the only way to beat that is to invest in the stock market, invest for the long haul, and have a very disciplined approach. Because if you're going to invest in the long haul, you have no business looking at the price of the stock every day, because it's a long-term investment. So don't worry about it. But not being invested will be the biggest costly mistake most people make.
When I meet with my clients, it always comes down to an emotional topic, right? Again, we're looking at our stage 1, which is our internal and external ecosystem. Stage 2 is financial trauma and anxiety. But you mentioned something that not listening or taking advice from those who aren't experts. And as I always say, that most of the time, our first financial fiduciaries typically are parents or uncles or cousins or friends in the neighborhood who may have heard it from delayed information, whether it's trading or investing in itself. And they're bringing their own personal experience into something without having any tangible, logical type of research being done. So we know that's always an issue. I say that you're going broke safely, right? Because people actually, they would invest in savings or high yield accounts, if you will, because it's safe, but you're going broke safely because you're not keeping in pace in terms of inflation. And people say, what do you mean by that? Well, I'm investing. Well, you're getting 2, 3, 4% rate of return. Even if you get 4% rate of return, you're looking at inflation is running about 3.5%, 4%. So you're breaking even at the best case scenario. So you always want to be somewhat aggressive. And I like the fact that you mentioned that you have to be patient. It's a patient process. It's a long term. You have to look at it from a long lens. And here's the thing, rich is a transactional phrase. Rich is transactional. Wealth is not as sexy. So as you mentioned earlier, if you're investing, whether it's 10, 15, 20% of your income into the market and not looking at it, you're not going to get the results that you want to see today because it's not sexy for over 15, 20, 25, 30 years because of compounding interest, if you will. You're going to see those results do come into play. I love how you touched upon that because, we know that investing is very emotional, especially within marginalized communities. As you mentioned, within your community itself, we spoke about becoming a doctor or engineer versus investing. But for the most part, we're going broke safely. And so we have to make sure that we're moving the needle. So with that being said, why is investing such an important aspect that many within the marginalized communities do not participate?
I think it's obviously there's financial literacy is one of those things, right? Because we go to college, even if you graduate from a beautiful business degree, they don't talk about investing really. They'll talk everything about the product, pricing, promotion, talk about all the business concepts. But the biggest thing they don't teach people is financial literacy. They don't talk about taxes. They don't talk about investing. They don't talk about the stock market. So the main things that result in financial literacy, they don't typically teach it in college. Even investment classes you'll go to, they'll talk about how to read the fundamental data, the consumer price reports. You learn all the intricacies, but you don't learn, okay, how do I personally invest? And it's actually very fascinating because, you want to go to college, they'd give you a student loan, right, to go to college. But then when you graduate from the degree and you want to start a business, they don't want to loan you the money because you don't have any history. So it's the whole education system is kind of flipped upside down in a way. And a lot of the financial literacy stuff is something that you have to learn through finding mentors. Like that's how I learned it. Even my parents, even though successful business people, they didn't really teach me about investing. They didn't teach me about inflation. They don't teach you about the cost of the dollar, like how a dollar 1970s is now probably worth 10 cents after adjusting for inflation. Even now, if you have a dollar today, 10 years later, that would need to be worth $4.81 or something just to keep up with the level of inflation. So your money is going to be losing value. And a lot of those things they don't teach about. And, rightly so. Otherwise, everybody would be investing, but they want to have people to have jobs and they want to have people to do all those different things. So you're always tied into a system. But again, that's a whole different topic that we could go into. But a lot of that is in a way designed to create a worker class, right? Rather than a financial free class. And I think those are the things you learn by rubbing shoulders with people that are at a different level, and then you get to learn a new insight. That's how it took place for me. Is when I came to America, I went out with a lot of these people. I donated to their charity dinners. Who can I have lunch with who's just way better off than I am? And I would do these things. I would even pay if I have to meet all these people, and they would share with me all those different things. And I think that's how you develop financial literacy. But I think that's kind of what I'm trying to do with what we do at Live Traders and with my company, is to bring financial literacy on, show people how you could actually get there. Not get rich quick, but can you get rich for sure? It might take you 10 years, it might take you longer, but how do you get there for sure? So I would rather bet on a sure thing than trying to get rich quick buying a crypto or anything along those lines.
I think an aspect that we need to also address within the marginalized communities, while investing is not as pronounced as we would like to see it, is that the fact that we just don't trust the financial systems as well too, because it's not geared towards us. And one thing that I want to mention is that there is more effort today than ever before in regards to speaking about financial literacy, right? That's a big thing now. So there's two things that you hear in the market, so to speak. One, financial literacy. Two, generational wealth. I firmly believe that financial literacy is a band-aid to a bigger problem. And that's why stage 4 is so important. And that's why I had you come on today, because financial literacy is important. But the idea of not understanding the inclusion piece, that's the most important piece, because the inclusion allows you to get to your stage 5, as you spoke about, in terms of investing, the types of investments that are out there, whether it's mutual funds, whether it's ETFs, and knowing your risk tolerance level, which is so important because that can kind of shape your portfolio that you're getting into as well. So understanding the fundamentals, understanding exactly what investing or insurances look like is so important. That's why inclusion is critical, it's paramount in this process, because generational wealth begins with generational knowledge, which is great. But again, if I'm just focusing on financial literacy, which companies are talking about, I'm missing a much bigger piece of the pie, because that's only so much, because we still have to have sustainability. Your thoughts on that?
I think that, it always helps to go back to the root cause, right? So, okay, why do we not have the financial literacy, or why do we not have the inclusion? I think that's partly because of also something you have on your model is the genetic code. Because if our parents never invested, if there was no talk on the dinner table about the markets or investing or how we have our money work for us, so our money beliefs have already been programmed in a way that even if you get the literacy, but if your money belief is keep pulling you back, well, the stock market is gambling. I heard my parents used to say that. Then we still have those beliefs holding us back from actually taking action on the literacy. Because you can learn all the best strategies in the world, but if you never implement it, then that typically, I think, has to go back to the root causes of what do we truly believe about money. And as you mentioned, people believe, financial system is a scam or all those things. But I think that's where the literacy ties into on, okay, what are the markets done over the last 10 years? How does it actually work? Let's break down the numbers. And then more importantly, let's do a deep dive internal inventory of ourselves. What do I truly believe about the market? Where do those beliefs come from? Who planted those beliefs in us, right? And why do we not take action on something that's been proven over the last 10 years? So yeah, I think, inclusion, all of those things kind of come together. It's almost like, it's a wheel. If one part of the wheel is broken, then even if you have the other parts, the wheel's not going to connect. So I think all of those things tie together to create sort of like a financial sustainable future.
So, Anmol, that's a great answer to the question. So here's another question for you. There are those who may be interested in trading and or both investing. Provide our listeners a brief definition of each and which knowledge base is required to do one or both.
So let's start with investing. Investing is when you're investing for the long haul. You're buying maybe the overall market, not even individual stocks, but you're buying the overall market, S&P 500 or the NASDAQ or an index fund. And you're just contributing to it every month. And the key is not to pick the right time to buy the market. The key is that we know that, okay, long-term market roughly provides 10% ROI a year. And we're just going to let that work for us in the long run. And we're not really looking to get in and out. We're not looking to pick the top or the bottom. We're just riding the wave and contributing to it. And that's for the long haul. Trading is where we're betting on the prices of the stock going up or down. And we're taking typically shorter term bets where if I buy a stock today, I think it might go up, 20, 30% in the next month. Then we're taking advantage of that. So when we're buying and selling stocks, so when we're buying something, the goal is to sell it higher than where we bought it, right? And that's typically a trade and vice versa. So with trading, there's typically a shorter time horizon and there's more skill involved, right? Because it's fast, you're getting in and out. So your timing is a big thing in that. Whereas investing, timing is not really that, it doesn't really matter that much, right? Because if you keep doing the long-term returns, you're going to get what the market's going to give you. So there's less risk involved. And that's a sure thing. Whereas trading is, it's like a job. It's like any other profession. There's skills that you need to learn. You need to learn how to read the charts. You need to know how to read price action, the price history of the stock, and more importantly, what the patterns are suggesting on the chart. So there's a whole skill level that goes on with that. And typically it takes people about a year to learn how to really trade because they're going to make mistakes. They're going to not follow it, right? That's a whole different element of psychology into it. Is you give a man a strategy that is sure to make him a millionaire in 10 years, but in the hopes of getting there in 1 year, he's going to tweak it, optimize it, try to mess with the strategy. And 10 years later, you're still not there yet. Whereas if you just stuck to one thing, you'd have already gotten there 10 years later. Investing is obviously less risk, and trading is more, we're actively taking risks every day. There's going to be winning trades. There's going to be also losing trades, but we're typically buying and selling in shorter increments and shorter time frames.
Excellent answer. And also, let's add with that as well. If you're looking at investing, you have to know your risk tolerance level as well, too. Are you willing to take more risk? Are you more passive? Understanding what type of portfolio you want to get into as well. As you mentioned, being active versus passive, that's huge as well. Are you trying to beat the market or are you just trying to ride the market? You may want to put a portion within. You may want to create like a core satellite type of portfolio where you have some strategic, then you have some tactical, wherever the case may be. But you have to have a true understanding of what your risk tolerance level is, because oftentimes I've met with clients and they look at their 401k, their terms of retirement. I ask them a question: have you ever had a chance to really look at what your portfolio looks like? And they would say no. And you say, well, you're in a bond heavy portfolio. And you've been in there for 30, 40 years. That goes back to going poor safely, but not knowing and not understanding, because I firmly believe that you have a large portion of individuals, in particular qualified plans at work or in just investing in general, that only do it because someone told them to do it versus not having an actual plan and having the interest of learning more about it. And as you know, as you get older, as you gain in age, if you haven't made any tweaks or any adjustments to your portfolio, you may have the same portfolio that you started with when you was 25, and now you're 55, and you've been in a bond-heavy portfolio where a lot of fixed products versus into the equities, where, as you know, you want to outpace inflation. Right. That's a whole different conversation. I'm sure I have that as well. I know I have that with a lot of my clients as well. Hey, Future World Builders, thanks for tuning in. If this is your first time riding the wave with me, make sure that you hit the subscribe button, hit that button right there, and you will be notified when we drop a new episode or trailer for upcoming episodes. And so, Anmol, what does true success mean to you?
For me, my definition of success has changed and evolved over time. When I didn't have any money, making a lot of money was success, right? But then you make the money and then you're like, okay, if you make all the money, but if your health is a mess, is that really success? And then I was like, think about it. I was like, no, that's not true success, right? And the same wise, you could be in a great health, you have a lot of money, but if your relationships are a mess, you can't even get along with people. Is that really success? It's not. So then now the way I define it is success is, achieving success in all areas of your life, health, wealth, love, and happiness. But then more importantly, you being okay personally with where you're at in each of those areas. So not comparing your level of success to somebody else's success. Are you personally happy with where you're at with your finances, with your health, with your relationships, right? And with your own mindset? Then that's when I consider to be true success, when you can sit down with yourself and be truly proud and happy with sort of where you're at or what you've achieved. So, but it should be in harmony, right? All the areas need to be in harmony together, because just having, success in one area, you're still not going to feel successful at the end of the day if it's only one area. So I think that's kind of how I define success. But then people need to not look at it as a destination of, if I get this, then I'm successful, right? It's just a constant goalpost keeps moving ahead. You just got to keep getting better. So every year the goal is just to keep getting better. And if every year at each of those areas, even if I'm 5% better, that's a success for me. So it's just a constant journey and being able to enjoy the journey rather than looking for a destination. Then I'll be happy if I get there. You're never going to be there, right? It's just about you being okay with where you're at in the area and enjoying that journey towards achieving that success.
I loved how you touched upon that. Stage 5 of the model, Anmol, talks about financial well-being. And what I've discovered in my plight is that everyone's financial well-being is different. And I felt that, once I was able to identify what my true financial well-being was, it gave me realistic expectations. Future wealth builders, I always say, know what your true financial well-being is. My true financial well-being is, one, to not outlive my income. Two, for financial health. Three, to be able to absorb a financial crisis. And the fourth one is to be able to travel and just enjoy my life. Now, I did not mention anything in regards to money. I said those are my four things that I look for in regards to my financial well-being. So what has that done? It allowed me to provide realistic expectations. As you say, the goalpost isn't moving, because those are four things that I'm looking for. And some people may want to live on a boat. Some people may want to live in a house. Some people may want to live in $1 million. Some people just want to get in an RV and travel. But once you know what your true stage 5 is, I think it provides you a pathway and a GPS for success. I think we're so caught up in regards to becoming rich, as we talked about earlier, because rich is transactional versus building wealth, which dovetails into my next question to you. So, cryptocurrencies are always a topic of interest with their pros and cons. Explain to the listeners what cryptos and the working mechanics of them are, and the pros and the cons, if you don't mind.
Definitely. So cryptocurrencies, it's basically the easiest way to think about it is it's a technology, right? It's a way to do transactions. So example, if our current financial systems, there's a timeline delay, there's a settlement delay. If I send you a wire transfer, you might get it tomorrow, right? If I send it international, you might get it 2, 3 days later. And even then it shows in your account, but in the back end, how the finance works, it's still not settled transaction. It typically takes, 2, 3 days for the transaction to be completed. And also there's intermediate involved, right? There's a bank involved. If I have to send you money, there's somebody in the middle, either taking a piece, either a cut, a wire fee, right? And they're adding all this time. And so we don't truly control our money right now because it's tied by the financial systems. The promise of crypto is that, okay, number one, the transaction are instant pretty much. If I send it to you right now, no matter what the amount size, it could be as huge as we can imagine, but it'll be sent and settled pretty much instantaneously within a few seconds. And then there's also super low cost to that. There's no intermediary involved. You don't have to tell your bank, okay, why am I sending you the money? Like, there's none of that involved. So it's decentralized. So that's the future promise of crypto. But then the other promise is how can it financial systems of the world? So example, even with real estate, there's so many intermediaries, right? There's the brokers taking a fee, and there's a closing cost, there's the title cost. There's all these costs that go into that. Whereas with crypto, the transaction could be direct with people, right? So there's no intermediates involved. Other thing is also what's happening with cryptocurrencies right now is tokenization. Meaning, let's say if you buy a Rolex watch, for example, how do we know if it's authentic? We don't know unless you buy from a dealer. He gives you a certificate of authenticity. But with NFTs, which are non-fungible tokens, what that could do is, let's say you buy a watch, you also get a NFT token that validates that you are the authentic original holder of this. And then when you sell the watch, you can transfer it over to someone else. So it also maintains that element of it. But nowadays, cryptocurrencies are also being used for, airline tickets. So right now, if you buy an airline ticket from an airline, and let's say you cannot travel, then guess what? You have to cancel with the airline, or you just lose your money. Like, you can't give your ticket to a friend. But now what they're doing is they're tokenizing airline tickets. So if I'm not able to travel, but you can travel, I can sell you my ticket and the name gets changed on the ticket similar to you. And that's all done through blockchain technology, through crypto. And I can even sell you my loyalty points, right? Or my upgrade pass. All of those things can be transferred over. So we're decentralizing everything, removing the intermediaries. Now, a lot of people invest in Bitcoin. There's nothing wrong with that. I don't personally believe in Bitcoin just because I look at technology. And when I look at technology, Bitcoin is kind of like the early stages of the internet, right? There was AOL, there was MySpace. They were the original ideas. They started it all, revolutionary concepts, but then there was faster, better technology. Google, Facebook came in, and now AOL and MySpace don't exist. And I think that's what's happening with cryptocurrencies. Bitcoin, in my opinion, is kind of like the AOL or the MySpace. Great idea, great concept. It started it all. But now there's better, faster technology, faster cryptocurrencies, let's say like Algorand, that are instant, faster, cheaper, and more secure and better for the environment. So I think that's where I see this trajectory headed, but it's still very early. It's like the early stages of the internet is what we're investing in right now. So, but with that, there's also a risk. What if the cryptocurrency you chose is not the one who ends up making it at the end? So people have to proceed with caution when it comes to cryptocurrencies. by not just investing all of their money in cryptos and taking a long shot, but you still want to have majority of your money in the stock market. Let's even if you're putting 10% of your income every month into the stock market, you could say, okay, maybe 1%, I call it play money. Maybe I'll take a little bet on Bitcoin. Maybe I'll take a little bet on something, but it should be a very small percentage of your overall investment portfolio.
Great job of breaking it down, because you get a lot of individuals because they think of cryptos as the get rich today. A lot of stories that, especially when the NFTs, when it first happened, you had all this happening, people was making a ton of money on it as well. So everyone said, I'm going to do it, but eventually, they kind of fell by the wayside as well. So, how does one achieve goals they set out for themselves in regards to investing?
The number one thing is to not look at this sort of big mountain of a goal that you want to climb, right? You want to kind of backtrack it. So the first thing I tell people is take a financial inventory. If money was not a problem, what would your ideal life look like? At that point, you want to assign everything a number. Okay, for me to be financially free, let's say if I had my rent covered or mortgage covered, what I need to live comfortably, right, is covered. Then you put a number to it. Maybe whatever that, maybe it's 300,000 a year, 500,000 a year, maybe it's a million a year. Whatever that number comes out for you, now you want to backtrack it. Okay, so for me to get to that number in the next 20 years, assuming I get 10% return on my investment, how much do I need to have invested in it now? And that allows you to determine how much to invest, right? And then assuming you're going to add monthly contributions, there's a lot of calculators online. The compounding calculator, if you put in, what if I started investing today with $1,000 and I put in, $100 a month? And if I get 10% return a year, what does my money look like in 10 years? So then now okay, at 10 years, you're going to have this X amount. Now that X amount is different from your goal target that you had set. Then you need to either increase the monthly contribution or the starting account size. So then you know that you're going to get there 10 years from later. So you want to backtrack that number, have the big goal, and then break it down. How much do I need to contribute to get there every month, every year? What do I need to start with? So you kind of just reverse engineer the process to be able to get there in the next 10, 20 years.
Future Wealth Bills, make sure that you backtrack and make sure that you understand what your financial well-being is, because it gives you realistic expectations and a GPS for success. What is the biggest mistake that you find that people make when investing?
Biggest mistake is trading on gut feel or emotion. I mean, if you haven't been in trading for professional, there is no gut feel. You don't have gut feel. It's just a whim, right? And we don't want to trade or invest on a whim. So a lot of people say, I think this stock is good. I'm like, based on what? Based on what are you making that decision that you think it's going to go up? Your thinking has no place in the market because you're new. So don't based on don't based on what your Uber driver is recommending you to buy. Don't trade based on what the Reddit is telling you to buy, or buy GameStop or GME or all these things that you read online. You don't want to rely on that. A lot of people think, but Anmol, I did my research on this stock. I'm like, how did you research it? I read these 3 articles online. I'm like, those articles were published like 2 weeks ago. That's old information. So what edge do you really have? So I think a lot of people just trade based on a feel, emotion, or what they heard online or what they read online, which is not the way to do it. You want to have your own plan. And more importantly, you need to know when you get into a stock, when you're going to get out if you're wrong. How do you know when you're wrong? How do you decide to take a small loss and walk away so you're not holding on, hoping it'll come back up? So that's going back to the emotion. People keep holding onto a stock that's going down. Maybe it'll come back up. Let me buy more. My average will go down. Maybe it'll come back up. If you're going to trade on maybes, then your financial future relies on maybe. Maybe you'll be financially successful, maybe. But if you don't want to live on maybes, you need to have a plan, right? And same way, if you have a stock, now let's say it's gone up 100%. When are you going to take profit? Because the profit's only made when you sell a position. If you keep holding, it might come all the way down. So you have to eliminate that uncertainty. And the only way you can do that is by having a plan. So before you get into any trade or investment, 2 things you need to know: when you're going to get out if you're wrong, and when you're going to get out if you're right. And how do you know if you're wrong? How do you know if you're right? And those are some of the things that we coach traders through. We do that through technical analysis by taking a look at charts and the price action and seeing, okay, the trend is changing. So that's kind of what we use. And all of that is learnable skills. All of that can be coached and trained.
Let me ask you a question. So when you're meeting with your clients in regards to investing, do you guys kind of go over the risk tolerance level?
Yeah, so I give them like a guideline. So for me, if it's a trade, then I tell that no trading loss should be more than 2% of your overall account. So even if you take 3 losses in a row, you lost 6%, not a big deal. We can recover that, right? So the key is to make every loss not more than 2%. That's the guideline that I give them. But even then, you have to work yourself to that. So I always start people with extremely low size just so you can learn first. So you get an understanding of how the software works, how to get in and out. You made all those mistakes. And then you work your way up. So you start maybe risking 0.5% of your account per trade. Then you go up. Okay, I'm still comfortable with this. I can do 1% now. I can do 1.5%. I can do 2%. But typically, I try to tell them don't exceed more than 2%. And that's going to trading. Right now, when it comes to investments, different because we're not really selling. We're holding and investing for the long haul. Most people, you should not be picking stocks. Just buy an index fund, put your money there. Don't look at it because they manage it for you, right? But if you're going to be picking stocks, then same thing. No stock should really be more than 2 to 5% of your overall account size. That's how we create diversification. Maybe you have 5% of your money in Tesla. Maybe you have 5% in Apple. Maybe you have 3% in Amazon. Maybe you got, 1% in this other stock that you think is going to be really good, right? Maybe a speculative trade. And then one, maybe Google, Amazon, Microsoft, Apple that are not going anywhere. Maybe you have a little bit more, 5% or more. So that's how you create an overall portfolio. So all your eggs are not in one basket, but there's all these different baskets that you've invested in. And also diversification. So a lot of people tell me, but I'm really diversified. I'm like, okay, what do you have? Oh, I have Amazon. I got my money in Apple, Microsoft, Google. I'm like, so you're not really diversified because all your money is in technology. So if the sector goes down, then everything's going to go down. If everything goes up, everything's going to go up. So you think you're diversified because you have all these stocks, but you all have all technology stocks. So then you want to have some energy stocks, some oil companies, some real estate companies, right? Some technology companies. So that's how you create a truly diversified portfolio. But again, I will say it again, unless you know how to do it, unless you're good at picking stocks, unless you learned how to do it, maybe you've taken one of our courses and you know how to do it. If not, don't even pick stocks. Just buy the index fund because that is surefire way you're never going to not beat the market. You're always going to get what the market returns are. So you're never going to get left behind. Whereas most Americans that pick stocks, I think 90% of them underperform the market. You're better off just buying the market and not even having to look at all these stocks every day.
Yeah, you're talking about a little bit of EMH theory there in terms of indexing, passive investing, so to speak. That's great information. Future Wealth Builders, again, welcome to the New Wealth Wave podcast. And today we had on our show Anmol Singh, noted investor, trader, and author of Prepping for Success. Make sure you grab a copy for yourself. Make sure that you hit the subscribe button as well to become part of the New Wealth Wave community. Couple of final questions for you, Anmol. First question for you is, what do you want the listeners to take away from this podcast?
I think the number one thing I would tell is to start investing, right? Because a lot of time people think, but I didn't start early. I wish I started early. Well, the next best time is right now. Because from 10 years from now, you'll be wishing you would have started now. So don't just, listen to this podcast and just move on to another podcast or another book. And, I call it stuck in the learning loop where people just keep moving from one video to another video, but not actually acting on it. So first step is act. What percentage of your account can you comfortably not notice it leaving your account? Maybe it's not 10% for you. Maybe it's 5% for you, right? Work it out. So first, when money comes into your account, first thing, put aside for taxes, put aside for immediate needs, rent, mortgage, or whatever, right? And then you have your living expenses. And then whatever's left, it technically should be invested. So that's how I tell people is invest what you can afford to invest, that if it's gone, you're not going to worry about it, right? And that's how you want to train yourself is once the money goes into your account, imagine it's gone. It's not gone, really. It's going to be here. In fact, it's going to be growing every few years, but imagine it's gone. So that way you're not worried about it. It's almost like it's not there. So that's the step one I will tell people is to start investing now. Don't worry about the stock market crashes unless you are, over 60 years or older, then it's a different story. But unless you're, under 50s, then just invest because market's always going to come back up in the long run. Now, if you're somebody close to retirement that you might be needing that money and you can't afford to tie it in for 5-10 years, then you want to change the allocation a little bit. So from somebody younger, 20, 30, 40, 100% stocks. As you get older in your age, maybe you have some gold, maybe you have some silver, maybe you have some bonds. Then you start kind of moving the lever from 100% stocks to maybe 40, 50% stocks. The rest is in gold, silver, and other assets that are going to slowly appreciate. That's, I guess, one piece of advice I would tell people. And obviously, if you're interested in trading, you can always go to my website and grab a free introductory 2-hour video course I recorded. And that'll give you a good insight on whether you should even get into this or not.
That leads me into my final question. So please provide your contact information if someone would like to gain your services or just learn more about how you do business in helping create great stage 5 generational wealth and stage 6 and creating those financial footprints.
The best step would be to go to my website, livetraders.com, and there you'll be able to create a free account. And once you create that, you'll get access to my introductory 2-hour course completely for free. That's a good starting point for people to get started if you're interested in trading. But if you want to reach out to me personally about my book or anything else, you can go to my website, unmol.net. You'll also find my social media stuff there. I'm the most active on Twitter and Instagram, and my username on both of those is Delta90, DELTA Ninety. So, just follow me on Delta 90 on Twitter and Instagram. You can also get more information on my website, unmol.net.
Hey, Future Wealth Builders, we'd like to thank Anmol Singh coming on the New Wealth Wave podcast, dropping those gems this afternoon. And Future Wealth Builders, on behalf of myself, our producer, Ray Haycraft, we'd like to thank again Anmol Singh for coming on to New Wealth Wave podcast. As we always end, generational wealth begins with generational knowledge. I'll see you on the next New Wealth Wave podcast. Take care, everyone.